Chapter 3: Financial Markets and the Investment Banking Process. Chapter 3: Learning Objectives. Explain what financial markets are and what role they play in improving the standard of living in an economy. Explain why it's important for financial markets to be somewhat efficient. Explain why there are so many different types of financial markets, as well as how various financial markets are differentiated. Describe an investment banking house and explain the role an investment banking house plays in helping firms raise funds in the financial markets. Explain how financial markets in the United States differ from financial markets in other parts of the world. Financial markets. Financial market is a system comprised of individuals and institutions, instruments, and procedures that brings together borrowers and savers. Types of financial markets. Money market. Money markets are instruments traded mature in 1 year or less, also called short-term markets. Capital markets. Capital markets include instruments with maturities greater than 1 year, also called long-term markets. Financial markets include primary market and secondary market. Primary market. Corporations raise funds by issuing new securities. Secondary market. Securities are traded among investors after they have been issued. Stock market transactions. Initial public offering, IPO. Privately held company offers stock to the public for the first time. It's also called going public. Investment banker is an organization that underwrites and distributes new issues of securities. It helps businesses and other entities obtain needed financing. The physical stock exchanges include New York Stock Exchange and American Stock Exchange. NASDAQ. NASDAQ is the computerized trading network used by the National Association of Securities Dealers. It's an automated quotation system, and it's a sophisticated market of its own, separate from the OTC market. Market efficiency. 3 categories. Weak form efficiency. All past or historical information is reflected in current market prices. Semi-strong form efficiency. Current market prices reflect all publicly available information. Strong form efficiency. Current market prices reflects all information, whether it is public or private. Chapter Principles. Key financial market concepts. What are financial markets? Financial markets are the mechanism by which borrowers and lenders are brought together. Why is it important for financial market to be economically efficient? Investors invest in assets that yield the highest return at the lowest cost. Borrowers borrow money at the lowest cost. Why is it important for financial markets to be informationally efficient? Prices of financial securities reflect valuable information. Why are there so many different types of financial markets? Different types exist because savers and borrowers have different needs. What is an investment banking house? It's an organization that acts as a middleman to help firms and governments raise capitals by issuing financial instruments.